Hello and welcome to another video from bowraven.com. In this video I'm going to show you how quick it is to set up and produce some cash flow forecasts for your company. So I've got two spreadsheets open here. I've got the cash flow forecaster software, Cash Forecaster, open here. I've also got over this side a summary of the information that I'm going to be using, because if you had your own company you would have all your data to hand, so I've made it easier by just keeping it all on one sheet. Forgive me if this video runs through things very quickly, but what I wanted to do was to demonstrate how quick and easy it is to produce some professional looking reports. So without further ado, I'm going to start off by putting in the company name in here, which I'm going to call it Furniture Company Limited. I'm going to leave it as a limited company, and I'm in the UK, so pounds, but of course you can change that to your own currency. I'm going to assume that this period started on the 1st of January 2016, and I'm going to only do this for 12 months just to demonstrate the software, but of course equally you could have changed that to whatever period up to the maximum of 7 years. Overdraft rate, well, I'm not going to have an overdraft, but over here I've got a deposit rate, so I'm going to put in that 0.005, that's 0.5%, and because the company takes credit card charges, I'm going to put in 0.015. And so any credit card entries we put in, it will automatically calculate the credit card charges for that. There's no VAT on credit card charges. There are two ways of putting your cash received figures based upon how your sales are paid by your customers. You can have an overriding totals here by putting in percentages, or you can put them specific for each of the sales line. So what I'm going to do, I'm going to change that to yes to override it, and that will make sense in a minute. The business is VAT registered and it's paid quarterly, and the first VAT month over here is month 2. It's called VAT, and moving on down, I'm going to ask the system to calculate my corporation tax, and it's paid. The first payment is paid in month 9, and I'm going to spread the tax. So basically what that means is within the profit and loss account, whatever the total tax is, it will spread it month by month. I'm not going to go into any of this detail here, but it's set up automatically to be a 20% tax rate, and you can do all sorts of extra calculations. I'm going to leave that for now. You've got your depreciation rates, and then also you've got your loans. So I've got 3 loans on this one. I've got a bank loan 1, which over here is bank loan 1, this one here. So interest charge to loan is no. So what that will do is it's as if it comes straight out your bank account. The interest rate is 4.5%. Lump payments no. Term is 36. First payment is month 1. No final lump. And the amount, I will be putting that in my opening balances because that's brought forward. There's also a bank loan 2 here, and interest charge to loan, again in this one, is no. Charged straight to the cash flow, and the interest rate here is 3.75%. No lump payments. Term is 60 months, and the first payment is in month 4. No lump payments, and it's bank loan 2. Then I've also got a hire purchase one, which is hire purchase 1. Interest charge to loan is yes. Interest rate is 5%, so 0.05%. No lumps. Term is 24 months. First payment is month 6. No lump payments, and then the amounts. These amounts are put in the data screen, and I'll come to those in a minute. My debtors aren't factored, so I'm going to ignore that, and then we're down into the headings which can be adjusted, so I'm not going into that detail because it's not necessary for this purpose. My opening balances. Now these you would get from your set of accounts or most recent set of management accounts if it's part of the way through your year, and it's quite simple. So over here I have motor vehicles, £75,000 cost, £25,000 depreciation, Equipment, £100,000 and £33,000 depreciation. Furniture and fittings, 11,500, £4,000, and computer equipment, 9.5, and £2,000 depreciation. My stock is £29,000. Amounts owed by customers, £35,000, and then you have to say when that is paid. So in this case it's all paid in month one, so January 2016, so £35,000. My cash at bank, £175,000. Moving down, my trade creditors to do with cost of sales is £39,500, again paid in month one or January. On my general overheads, it's £5,000, again paid in month one, £5,000. My bank loan one, which we've already set up how it's repaid at the opening, was £20,000. My taxation creditor is £25,000. My VAT creditor, £41,000. PAYE, £28,500. There's a director's loan of £25,000. And then got share capital 100. And notice down the bottom here, I've got a difference warning, and it'll be on all the reports warning unless you didn't put this figure in here. So I'm going to put in my balancing figure, which is my profit and loss account. Whoops, too many zeros. And then I know now that my opening figures balance, which is an important starting point. Of course, if you're a new business, you won't have those opening balances, but in this case, it's an existing business. So moving down, we've got our sales data. So in here, type 1, which is called, I'm just going to call them generic terms just for demonstration purposes. So I'm going to call this credit card sales. The next one down is sales paid in cash, cash sales. And the next one down that is 30-day sales. You can, these just to pop up things to tell you what to put in the boxes. They're quite useful, but you can just move them off the screen. And in each case, these are all VATable. So I'm going to put in point 2. You can use a drop-down box if you want to. Point 2. And then based upon this one being, the top one was credit card. And then by changing that to credit card, we'd put in the charge for credit card. So automatically that will put the cost in for you. These were cash, and then these were 30-day. And in the credit card sales was £120,000. Cash sales £10,000. And 30-day sales £35,000. And then all I'm going to do in this, for the demonstration, I'm just going to copy those across. I'm going to keep them the same out per month. Of course, you could just equally put in what you expect those to be, whether they're increasing or what have you. So moving down to our cost of sales over here. So we have some direct labour. We have carcass costs. We have door costs, and then sundry materials. Now, the very first one is there's no VAT, and these last three there is 20% VAT, and equally, like I say, you can either do the drop down or type in the amount. The very first one, it's PAYE, because it's wages. It splits out. In the UK, you can split out the amount paid to the government, and in this case, I'm going to say it's actually 30% of that, so 30%. And in the terms, you need to change that to payroll split, so it will spit out those payments for you. And then the direct labour is £54,000, and then all of these, just remembering going back to these sales, these are all net of VAT if you are VAT registered or in your own country, sales tax and so on, or GST. So make sure you enter these net. If you're not VAT registered or anything, then you don't have to worry about that. But I'm just going to put these, because then the system or the software will calculate those for you based upon putting the VAT rate over here. So now I'm going to enter my monthly stock. In this case, I'm going to assume our stock stays at roughly the same amount throughout. So I'm just going to copy that across. Sorry, I didn't copy those ones across. Assume they all stay the same for the period. And again, I'm only forecasting for 12 months. Notice at the top here, it's got in months. Based upon I put in the 1st of January 2016, it'll automatically give you your headings here so you know where you are in the data sheet. So then I'm going to go down to my wages and salaries. So I've got my office salaries, no VAT obviously. The PAYE rate is 30%. I've got some director's remuneration, which is 40%. And then company and I. In the UK, we have effectively like a tax charge, which is over and above the gross wages you pay to people. So that's actually 100% of that gets paid to the government. These, in this section, they're automatically set up as payroll split. And let's put those figures in. Office wages, 18,500. Director's rem, £10,000, and then the company NI, £4,500, and I'll just copy those ones across. They're going to stay the same again. Then I've got my overhead costs. Now I've set it up already on here based upon the headings that are in here, but you can quite easily just drop down and change these to whatever they are. And if your heading is not there that you have in your company, you can go and set these up on the info sheet and then select it here. So I'm going to just leave those as is. And first of all, I'm going to just go down and change the VAT rate per what this is over here. They defaulted to 0, so I've got 20%, 20%, and so on. So I'm just going to go and put those down. So 20%, 20%. And this is a safeguard. It will only allow you to put in the right percentages. I typed in the wrong thing. Let me just do that by the drop down, make it easier. 2 zeros. So I know including the ladies not VAT registered insurance, there's no VAT on telephone. There is. Whoops. Building post stationery, 20%. The rent, there's no VAT on their rent. Light and heat, 20%. Sundry, yes. Travelling is naught. Rates, there's no VAT on that. Repairs and renewals, there is. Hire of equipment, there is. Website, there is. Motor expenses, there is. And then advertising, there is. And then I'm going to go through all the terms. So you can do the drop down on these. So you've got from cash through to 120 days. So I've either got 30 days or cash. So first two, cleaning, they're paid cash, which is effectively immediately. Insurance is cash. Telephone, 30-day. Next one is rent, which is cash. The next one is travel, which is cash. Rates, cash. And I'll put down website as cash, and then advertising, because I'm assuming that's all Google pay-per-click type stuff, which is you have to pay it immediately, so that's cash. And then all I need to do is put in the amounts. So I'm just going to run down these amounts in this column here. So I've got 500, 150, 100, £2,000, 500, 400, £2,000, 600, 450, 100, 900, £1,000, 300, 250, £3,000, £6,000, and hopefully that'll line up with advertising. I've done it right. Now, I note here that the rent is only to May 16. That'll come clear why that is. So probably the easiest thing, I'll just copy it all the way across to December, all of them. And I'm going to go back and delete. That is the rent column, yes. It only goes through to May. So delete from June onwards. So that's my overheads. Now I've got some bank charges. So they're already set up. No VAT and they're paid cash, so immediately. And that's £100 a month. So just copy that across. And again, of course, in yours, you may have different amounts. They may go up and they may fluctuate. Dividends. The company pays dividends of £5,000 a month. Copy that across. Then we've got some asset purchases. And as the loans are here first, I'm going to put the loan advances in. So with this freehold purchase, we've got a loan of £300,000 here. And I know that is bank loan 2. You need to line these up because we set up the details of bank loan 2. And notice here, bank loan 1, it will tell you that you've got an opening balance of £20,000. We've already set that one up as well. So bank loan 2 is received in April. That's £300,000. And then this one here, there's a loan of £90,000, which is HP1 in May. So let's just go up to HP1, and that's £90,000. And then also, so let's just put the asset additions in. So the very first one is freehold property. There's no VAT on this one. The transaction is in April, so I'm going to put month 4. And notice here it says maximum 12. The reason it's saying that is because we're only forecasting for 12 months. If this was 36 months, it would allow you to put your purchase up to 36 months and so on. It stops you from forecasting outside the period you're looking for. So in this case, it's a purchase. So just select its purchase. And then the cost. In this case, it's £500,000. So one more nought. And then my other purchase, I'll just select the drop down, is equipment. In this case, it's a 20% VAT. I'm looking at this one here now. Purchase in May or month 5. And again, select the drop down. Within here, you've got the ability to put in assets that you sell as well. So, but I'm not going to go into that in this case. That's £110,000. And I'm pretty sure that is everything entered. So if I now turn to my cash flow, and the purpose for doing this cash flow was, in this particular case, this business was seeking a bank loan to not only purchase a new premises in April, which has come through here on your cash flow forecast, but also as a result of expanding and buying a premises, it needed new equipment. So it was looking to do some loan advances. Now I can see I've put in only £30,000 there. So let me just go back and correct that because the cash flows won't work. And I seem to remember there was a director's loan which I didn't put in either. Otherwise we'll be overdrawn. And that was in April, month 4, so £100,000. Okay, so let's go back to my cash flow. So there's the £100,000 from the directors. There's the corrected £300,000 loan for the purchase of property, £90,000 for the equipment. And that's pretty much it. So now I've got my professional looking cash flow forecast. I can do, notice there's lots of zero lines, which we don't need on there. And of course they're there for, if your company has all these different headings. So I can just do a Control N and it will clear those away for me automatically. So it'll only show the lines where there are amounts on it. So on my cash flow, it's going to show me my customer payments based upon the terms I've put in there. You've got your credit card sales, which are immediate, pretty much immediate. You've got your cash sales, that's immediate. And then you've got your 30-day, and it would take care of all of that. You've got your direct loan received, your loans, and then interest income, I put in 0.5%. So what it'll look at is how much money you've got in the bank, and it'll put the interest in automatically as if you've put it across to a deposit account. And then you've got your outgoings, your cost of sales, or when they're paid, direct wages, and so on. It will split out your PAYE payments, which is based upon your cost of sales, payroll, and also obviously your direct wages, and then you've got your general overheads and so on. So this will show you that you've got a closing balance of £259,000 here and so on. And even with the loans that are coming in, you're seeing that the company is still cash rich. So hopefully the bank would actually say yes to this loan. Automatically it's put in that you've got your tax paid in month 9. That was your brought forward. And if you were to forecast forward for another period, you'll see that it's automatically calculated tax at 20% for the following period and put that in month 9. But I haven't put all the other data in there for that. Your profit and loss account. Again, you've got an extra line here for loss or profit on sale of assets. So I'm going to do a control no to get rid of that. So you've only got the lines that are important to you. So it's got your turnover, it's got your cost of sales, it'll give you a gross profit percentage and your actual gross profit, and then it will summarize all the costs you put in, your wages, overheads, financial overheads, and so on. This one will split out your actual overheads. Again, I'm going to just do a control no. So it will show you, for example, on the wages and salaries, you've got £33,000 here. And on your profit and loss account, you've got £33,000. So it'll give you the breakdown of that on your overheads. Similarly, with your overheads, 18,250, 18,250. So you've got a breakdown of that. On the trading summary, do a control N. So it'll split it down here. So you've got your credit card sales, cash sales, and 30-day sales, £165,000. Show you the split of those. If I go to my profit and loss account, it will just give you the summary amount. So if you wanted to give a breakdown of that sum on what your sales are split in, it will show you here. And that's the same with your cost of sales. And then it will tell you that this is your direct labour. It's a PAYE rate at 30%, VAT at 20%. It will show you all that information. Fixed assets. I'm going to do a control N. So you've got your brought forwards here, you've got your additions here, and then it's automatically calculated depreciation. That's based upon the depreciation rates you've put in, and then it'll automatically know, okay, well, I've added an asset, so it'll start to depreciate those based upon what you've put in there. You've got a backup document, just do control M, which gives you a bit more detail. So you've got on your cash flow, for example, your customer payments. So it'll give you a breakdown of how that's made up. You've got your opening plus what's received in that month, and it will give you all sorts of other breakdowns in there. Payroll taxes, it will show you how the figures are made up, and it will give you your closing balances and so on. You've got your VAT report, do a control N. So it'll give you the balance and how the quarterly payments are made up. So you've got a quarterly payment there of 62,970 in February 16. So if I go to my cash flow forecast, you've got a VAT payment there of 62,970. So it'll do all of that type of thing for you. On your loans, it will automatically do that for you based on the information you put in. So if we take hire purchase 1, we put in interest rate of 5%, term 24 months, and all the other information. The new loan, which was in month 5, it's automatically calculate the repayments and the interest. And this will be taken to the profit and loss account, and these payments, so 3965, will go straight to the cash flow forecast. Factoring, well, we don't have factoring in this particular business. Then you've got your summary balance sheet. I'm going to just do a control N to show any of the columns we need. So at the end of December 15, which is your opening balances, that balances off, and then at the end of December 2016, which is your forecast period in this case, it will show you your assets, obviously increased with the new purchases there, and then all your different figures in here. Now I've noticed actually we've got nothing shown as amounts owed by customers. Now that's probably because what I forgot to do, and this makes it so when you're reviewing this, you can see how easy it is to change things. And because that's nil, what I need to do is change that to no rather than yes, and that'll show me my amount there. So the important thing is that we all make mistakes, and when you make a mistake and you start reviewing the figures and think, well, that doesn't look right, so you can go back and quickly check things and change things as I just did there. So what that basically is doing, just to run back to that, is override debtors. In other words, override the specifics on here. And then if you set that to yes, then whatever you put here, it will just generalize how amounts are paid across all of your sales. So you've got two types of balance sheet. You've either got a summary one, as I was starting to explain to you when that anomaly threw out, and you've got all your figures running down here, and then you've got your monthly balance sheet. So it'll give you a balance sheet. Let's do a Control N. It will give you a monthly balance sheet at the end of each of your months, giving you a closing one, which would type to your summary 12 monthly ones. And that's pretty much it. So in what I think is just it's certainly under half an hour, I have all of my cash flow forecast reports. Now, of course, if you've got figures that fluctuate from month to month, and you've got, you're doing 24 months, 36 months, or even longer, of course, it would take a little bit longer because you've got more figures to put in. But I think this hopefully demonstrates how quick and easy it is to get some professional looking reports out. So if, for example, I wanted to print this, I click on File, Print, and there's my profit and loss account. That's what it would look like. If I maximize that, you might be able to see it a little bit better. So that's what your profit and loss would look like. I'm not going to print that. And my cash flow. So if I do File, Print, that's what my cash flow forecast would look like, and so on. Well, thank you very much for listening. That's all for now.